CoinMarketCap says that on Wednesday, Ripple's XRP reached an intraday high of $0.408. This was because there were more large transactions. This is a 4% gain every day and an 8% weekly gain. Whale Alert got word that on November 29, 684,171 XRP worth $110,017,409 moved between two anonymous wallets. This was a big deal. Bitso sent $25,800,000 XRP, $10,541,384 to an anonymous wallet simultaneously. A second whale also sent $25,817,990, $10,457,212, from Bitstamp to an unidentified address. Data from the charting tool TradingView reveals that XRP is seeking to break over the $0.4858 resistance level. The technical indicators, on the other hand, show different things. The momentum indicator moving average convergence divergence, MACD, is optimistic. However, the relative strength index, RSI, which also measures momentum, is at 50, which is neutral. This means that the payment token does not have the strength to keep going up, even though the momentum indicator relative strength index, RSI, is neutral. XRP does not agree with what Coinbase wallet said about delisting. The payment token does not care that Coinbase wallet gave it a bad review. The blockchain-based cryptocurrency startup said it would start taking XRP out of its wallet on December 5 because the trading activity has reportedly been slow. Even though people are pessimistic, XRP is still the seventh largest cryptocurrency, with a market capitalization of $19.6 billion. Ripple's general counsel is blaming the SEC because BlockFi went bankrupt on Monday. Stuart Alderete said in a tweet, another SEC success story of regulation by enforcement. Months after the $100 million BlockFi SEC deal, BlockFi files for bankruptcy. FTX owes $275 million to BlockFi in the form of a loan. FTX owes unknown sums to BlockFi. Nothing ever stood out. Fines paid. Whose is this money? Customers were killed off. Ripple and the SEC are in a legal battle that is still going on and should be over in 2019. There are rumors that the problem could be solved faster than expected. Former federal prosecutor James Filan says that because the opening motions for summary judgment were sent in early, the redacted answers might do the same. The failure of FTX has hurt Coinbase's stock and bonds, which has brought back worries about the future of the US-listed cryptocurrency exchange. Over the past month, Coinbase's bonds with dates in 2028 have lost about 10% of their value because investors wanted a high yield of 14% to buy the paper. Compared to 93 cents at the beginning of 2022, the bonds are trading at 59 cents on the dollar, a significant reduction. John McClain, a portfolio manager at Brandywine Global Investment Management, which owns Coinbase bonds, said that the way the debt trades is a sign of distressed prices. The collapse of Sam Bankman-Minus $32 Fried's billion-dollar cryptocurrency exchange has also hurt the value of Coinbase's equity. Its Nasdaq-traded shares have dropped by about a fifth in the past 4 weeks and are now worth just under $48 each after a slight rise on Friday. At the peak of the cryptocurrency bull run in November of last year, the share price of Coinbase reached about $369. So far this year, the share price has dropped 81%. According to the business, Coinbase's exposure to FTX is minimal, with only $15 million deposited with the Bahamas-based exchange. Still, the sudden drops show investors losing faith in the cryptocurrency market's future. This week, Moody's Investors Service called the end of FTX a credit negative for Coinbase, saying that its implosion will radically change the crypto ecosystem, further shatter confidence, and raise uncertainties about the industry's continued prospects. According to Moody's analysis on Tuesday, the shockwaves caused by FTX's bankruptcy last month could affect Coinbase's client engagement and trading volumes, further impairing the company's profitability. Coinbase is in a solid position, according to a spokeswoman for the exchange, who also noted that the company has no significant exposure to recent events. Since the prices of crypto tokens have dropped since their all-time high a year ago, Coinbase's trading revenue has dried up. The San Francisco Corporation revealed plans to lay off around 1,000 employees, or a fifth of its then workforce, in June. Coinbase lost $545 million in the third quarter compared to the same time last year, when it made a net profit of $406 million. After FTX dropped sharply in November, the prices of popular coins dropped even more. Bitcoin's price fell to a level not seen since December 2020. The block crypto data shows that the number of trades in the industry also stayed low. According to McLean at Brandywine, the current bond prices for Coinbase show an apathy and a lack of appetite to purchase anything crypto-related as a fixed-income investor. Other companies concentrating on cryptocurrencies, such as Bitcoin investor MicroStrategy and investment firm Galaxy Digital, have dropped their shares precipitously recently. If this thing goes bad, I do not want to have my name connected with lending to Coinbase, McLean continued. I think there is a lot of headline risk with Coinbase and with asset managers like myself. Fadi Masih, vice president of Moody's Financial Institution Group, says that the firm's $5 billion cash reserve as of September 30th could help it weather the storm, despite its poor financial performance in recent months. McLean agreed, saying, "They can handle the storm." He said, "We think there are good reasons to want the debt. We need to see that they can aggressively scale down their cost structure to match the new reality of their business, and we have seen signs of that." McLean said that Coinbase should buy back every single bond they can, based on their balance sheet and how leverage has hurt their competitors. Richard Repetto of Piper Sandler wrote in a research note on Friday, "We think Coinbase has a perfect financial position and may be able to make money in the long run from the FTX bankruptcy." However, he continued, "We think a more aggressive personnel reduction is a wise move in managing expenses and maintaining shareholder value in a potential extended crypto winter that could occur." According to Moody, Coinbase would gain from having a transparent organizational structure and governance framework as a publicly traded U.S. corporation. On the other hand, many of Coinbase's competitors in other countries have unclear structures and are trying to be more open. Moody said that FTX's death had left a market share hole that will be hard to fill without more interest in cryptocurrencies. If you enjoyed this video, don't forget to subscribe to our channel.